You've probably heard a ton about America's government debt. It's ballooning, it's a crisis, it's this huge number we can barely wrap our heads around. And the story usually goes that the USA is the world's biggest borrower. But on the other side of that coin, you've got China, right? And they're painted as the complete opposite, the world's responsible lender, saving up for a rainy day. So let's start with the numbers everyone sees. And yeah, on paper, that story seems to check out. The United States official government debt is sitting at about 123% of its entire economic output, its GDP. And China? It looks way better at just 84% of its GDP. Looking at this slide, you'd think America is definitely the one with a problem. But what if that's not the whole story? What if those official numbers are actually hiding a much, much bigger and way more complicated reality? Well, that's exactly what we're going to dive into. Let's talk about this debt myth for a second. The conventional wisdom is super simple. America borrows, China lends. I mean, China holds hundreds of billions of dollars in US debt, and we often hear about it as this big piece of leverage they have. It's a nice, clean story, but as we're about to find out, it's also incredibly misleading. All right, it is time to uncover the real numbers. Now, before we jump in, a really important disclaimer. Official economic data from China can be, let's just say, a bit fuzzy. A lot of what we're looking at here is based on analysis from big institutions like the IMF and the World Bank, but even they have to rely on numbers the Chinese government gives them. So, with that in mind, let's start peeling back the layers. The first thing you need to know is that in China, debt is just hidden a lot better. Here in the US, our state and local governments add about 12% of GDP to the total debt, bringing us up to about 132%. But in China, the provincial governments take on absolutely massive amounts of debt for huge projects. And when you add that in, well, China's collective government debt suddenly jumps to 160% of its GDP, already way higher than the USA's. But even that 160% number misses the single biggest piece of this entire puzzle: China's gigantic network of state-owned companies. So, what in the world is a state-owned enterprise, or an SOE? Think of it like a hybrid creature. It acts like a private company trying to turn a profit, but it's actually owned by the government, and its real job is to carry out the government's goals. They're the ones building all the crazy infrastructure, and they do it by borrowing the money themselves. That way, the debt never, ever shows up on the government's official books. So the big question is, just how much debt are these SOEs holding? Well, it's almost impossible to get an exact figure, but even conservative estimates put their debt around $30 trillion. So when you add that to all the other government debts, China's total debt to GDP ratio just skyrockets to over 300%. And believe it or not, it might be even worse than that. See, this all assumes that China's official GDP numbers are accurate. A lot of economists outside of China think the economy might actually be anywhere from 20% to 60% smaller than what's reported. And if that's true, the real debt to GDP ratio could be as high as 450%. That's more than 3 times higher than America's. Okay. If the debt is really that high, why hasn't the entire system just imploded? Well, that brings us to our next point. China's economy is just different. It doesn't play by the same rules we're used to in a free market system. And this is where things get really bizarre. China's credit rating is a respectable A+, which is good, but it's not the AA+ that the United States has. Now, in any normal market, more risk means you have to pay more interest to borrow money. So why are China's borrowing costs so ridiculously cheap? I mean, just look at the numbers. The US government pays about 4.5% interest to borrow for 10 years. China pays just 1.7%. That's almost 3 times less. Why on earth would anybody lend money to the riskier Chinese government for a much, much lower return? The short answer is they don't really have a choice. So how do they pull this off? It's a whole system. First, they have super strict capital controls, which basically traps money inside the country. With nowhere else to go, that money has to find a home. A lot of it gets parked in state-owned banks, which are then told to lend it right back to the government on the cheap. This whole cycle is made stronger by the fact that there just aren't many other good places to invest. The stock market has been flat for a decade, and it's all built on a foundation of super low consumer spending. And when I say low, I mean the difference is absolutely staggering. In the US, we, the consumers, make up 68% of our economy. Americans are fantastic at buying stuff. In China, it's only 39%. That country is amazing at making things, but they are really, really bad at buying them. So if people aren't spending and they're not putting their money in stocks, where has all that saved up cash gone? You guessed it, real estate. All that money has poured into the housing market, turning it into the single largest asset class on the planet, creating a massive bubble, and now a serious risk of deflation where prices for everything just keep falling. Now, so far, this sounds pretty terrible, right? A ticking time bomb. But there is a huge counter-argument here, a kind of secret advantage that completely changes the picture. See, looking only at debt is like looking at just one side of a company's books. You also have to look at the assets. And this is where the story completely flips on its head. The US government, sure, it has assets, but they are dwarfed by its debts, leaving it with a net worth of around negative $40 trillion. The Chinese government, on the other hand, has an estimated positive net worth of around $20 trillion. So yes, it has gigantic debts, but it has even more gigantic assets. So what exactly does it own? Well, basically, the core pillars of the entire economy. It officially owns all the land in the country. It owns that whole network of state-owned enterprises we just talked about, all the huge industrial and financial companies. And it owns most of the country's utilities. In theory, it has this massive portfolio of assets it could sell off to pay down its debts, something the US government just can't do at that scale. Okay, let's wrap this up. The real bottom line here is that both the US and the Chinese economies are incredibly weird. They're just weird in completely opposite ways. And that's why trying to compare them one-to-one is pretty much impossible. This table really sums it up perfectly. America's problem is stubborn inflation. China's is stubborn deflation. The US overconsumes, China underconsumes. You could argue the US private sector is underregulated, while China's is definitely overregulated. And of course, America's debt is out there for everyone to see, while China's is huge but very well hidden. So despite all the tough talk and headlines, this isn't really an adversarial game. These two economies are just so deeply tangled up with each other. A real falling out, a true decoupling, wouldn't end with a winner and a loser. It would just create losers on both sides of the Pacific. So the real takeaway here is actually pretty simple. China's economic problems are just as big and maybe even bigger than America's. They are just way, way better at keeping them hidden from plain sight. The real question is, for how much longer?